What if I told you that an ordinary year investing just $5,000 every month 15 years ago, without picking a single stock, would have over $40,000 today? That is not a theory. That is real data from the stock market. And by the end of this video, you will have exactly that system available to you. Welcome back to Daksha Luma. If you have ever wondered how ordinary yours are building extraordinary wealth through the stock market, then you are in exactly the right place today. Today we are diving deep into how to start investing in S&P 500. Whether you are just getting started with your first investment account or you want to sharpen your long-term strategy, this video will give you a clear, practical, and completely actionable roadmap. No jargon, no confusing charts, no theories that only work in textbooks. By the end of today's video, you will know exactly what to do, what mistakes to avoid, and how to build a system that works for investors like you just like you. Stay with me till the very end because I have a real rupee calculation that will show you how much wealth a small monthly investment can actually create over time. And the numbers might genuinely surprise you. Let us get started right now. Let me start with a number that should bother every single person watching this video. According to multiple financial surveys, more than 80% of the average households keep the majority of their savings in bank fixed deposits or savings accounts. Bank savings accounts globally currently offer around 3 to 4% interest per year. Fixed deposits offer approximately 6 to 7% per year for a standard one-year term. Now here is the problem. The economy's average consumer price inflation has consistently run at 5 to 7% per year over the last decade. That means if your money is earning 4% in a savings account but inflation is 6%, your actual purchasing power is going backwards by 2% every single year. After 10 years of this, your money has not just stood still. It has quietly lost a significant portion of its real value, even though the nominal number in your passbook looks bigger. This is called negative real returns, and it affects tens of millions of your families every year. The solution is not complicated. But it does require understanding how the stock market works, what how to start investing in S&P 500 really means in practice, and how to apply it in a way that fits your income, your risk tolerance, and your financial goals. Most beginner resources available online are built for American or European investors. They talk about the S&P 500, they give examples in dollars, and they assume a financial infrastructure that simply does not exist globally. Today we are going to fix all of that with a guide built specifically for how to start investing in S&P 500 in the year context. Ha! And you know what genuinely made me laugh the first time I understood this properly? The solution is not complicated. It is actually really simple. So simple that once you see it, you will wonder why nobody explained it to you years ago. But here's where I have to pause for a second. Because this is also the part that honestly made me sad. Genuinely sad. Because millions of people are missing this every single day. Not because they are not smart. Not because they do not care about their money. Simply because nobody ever sat down and explained it to them clearly. Well, that changes right now. Let me walk you through it step by step. Let us break down how to start investing in S&P 500 properly, starting from the absolute foundation. The stock market is primarily represented by two exchanges. The Major Stock Exchange, which stands for National Stock Exchange, and the Major Stock Exchange, which stands for Bombay Stock Exchange. The S&P 500 index tracks the performance of the top 50 companies by free float market capitalization on the major stock exchange. The market index tracks the top 30 companies on the major stock exchange. When news says the market went up or down by 1% today, they are almost always referring to the S&P 500. When you buy a share of a company, you are buying a small fractional ownership stake in that business. If the company grows its revenues and profits over time, the value of your ownership stake grows. If the company pays dividends, you receive a proportional share of those profits directly into your bank account. Now let us go deeper into how to start investing in S&P 500 with 5 concepts you must understand. Concept 1 is the difference between trading and investing. Trading means buying and selling stocks frequently, trying to profit from short-term price movements. Investing means buying quality companies and holding them for years or decades, allowing compounding to work. Research consistently shows that more than 90% of retail traders lose money. Long-term investors in quality indices and companies have historically done very well. For how to start investing in S&P 500, we are firmly in the investing camp, not the trading camp. Concept 2 is understanding market cycles. The stock market does not go up in a straight line. It goes through bull markets, which are extended periods of rising prices, and bear markets, which are periods of falling prices of 20% or more from recent highs. Globally has experienced major bear markets in 2001, 2008, 2015, and 2020. Every single time, the market eventually recovered and reached new highs. The investors who stayed invested through those crashes were rewarded. The ones who sold in panic locked in permanent losses. Concept 3 is the role of diversification. Never put all your money in a single stock or a single sector. If you invest only in IT stocks and the IT sector underperforms for 3 years, your entire portfolio suffers. But if you hold a diversified portfolio across banking, IT, healthcare, FMCG, infrastructure, and manufacturing, underperformance in one sector is offset by others. Concept 4 is the difference between large cap, mid cap, and small cap stocks. Large cap stocks are the top 100 companies by market capitalization. They are the most stable, the most liquid, and carry the lowest risk. Think Reliance, TCS, HDFC Bank, Infosys. Mid-cap stocks are companies ranked 101 to 250. They have higher growth potential but more volatility. Small-cap stocks are companies ranked 251 and beyond. They can deliver spectacular returns but also spectacular losses. As a beginner, start with large-cap index funds before moving to mid and small-cap. Concept 5, and this is the most powerful one, is the time value of money combined with compounding. Compounding means your returns earn returns. A 12% annual return does not just add 12% each year to your initial investment. It adds 12% to the growing total each year. Over 20 or 30 years, this creates wealth that is mathematically difficult to believe until you actually see the numbers. How to get started with how to start investing in S&P 500 globally. Step 1. Open a brokerage and trading account with a licensed discount broker. Your broker, and your brokerage are popular, low-cost options with zero account opening fees. Step 2. Complete your KYC using National ID and Tax ID. This takes 10 to 15 minutes online. Step 3. Start with an index fund SIP rather than individual stocks. Step 4. Invest an amount you can afford to leave untouched for a minimum of 5 years. Step 5. Automate your investments so they happen without needing your willpower each month. Let me give you a real example that makes all of this completely concrete. Priya is a 28-year-old software engineer in your city earning a take-home salary of $70,000 per month. She has been keeping her savings in a fixed deposit at 6.5% per year. After learning about how to start investing in S&P 500, she decides to redirect $10,000 per month into a S&P 500 index fund through a monthly SIP. Let us look at what happens under different time horizons. The S&P 500 has delivered approximately 13 to 15% CAGR over 20-year rolling periods historically. We will use a conservative 12% assumption. Monthly SIP, $10,000. Total invested over 10 years, $1,200,000. Corpus after 10 years at 12%, approximately $23,200,000. Total invested over 20 years, $2,400,000. Corpus after 20 years at 12%, approximately $99,900,000, close to $110 million. Total invested over 30 years, $3,600,000. Corpus after 30 years at 12%, approximately $3.510 million. So Priya invested a total of $3,600,000 over 30 years and ended up with $3.510 million. Her money multiplied nearly 10 times over the total amount she put in. The magic here is not a high salary or a genius stock pick. It is just consistency, time, and the mathematical miracle of compounding. Now compare that with the fixed deposit approach. The same $10,000 per month at 6.5% per year over 30 years would give a corpus of approximately $1.110 million. That is a 2.410 million rupee difference from the same amount of money, simply by choosing how to start investing in S&P 500 over a fixed deposit. But here is an important nuance. The stock market comes with volatility. In year 8 of Priya's investment, the index might fall 35% during a crisis. Her portfolio value drops temporarily. But because she keeps her monthly SIP running, she is actually buying more units at lower prices during the crash. When the market recovers, those cheap units generate outsized returns. This strategy is called rupee cost averaging, and it is one of the great advantages of a SIP investment approach. One final scenario to motivate you. If Priya had started the same 10,000 rupee SIP 5 years earlier, at age 23, the 30-year corpus would grow to approximately $6.410 million instead of $3.510 million. 5 extra years of investing created $2.910 million of additional wealth. This is why starting early is so critically important. Let me give you your complete action plan for how to start investing in S&P 500 to implement this week. Action Step 1. If you do not have a brokerage account, open one today. Go to your broker, or your brokerage and complete the online KYC. It genuinely takes less than 20 minutes and there is no cost involved. Action Step 2. Decide your monthly SIP amount. Start with whatever is comfortable. Even $500 per month is a start. The habit and the account are more important than the amount when you are beginning. Action Step 3. Choose a S&P 500 index fund as your first investment. Good options include UTI S&P 500 Index Fund Direct Growth or HDFC Index Fund S&P 500 Plan Direct Growth. Both have very low expense ratios below 0.15% per year. Action Step 4. Set up an auto-debit mandate through your net banking so the SIP amount deducts automatically every month without requiring any action from you. Action Step 5. Commit to a 5-year minimum horizon. Do not check your portfolio value every day. Set a quarterly calendar reminder for a 5-minute review and that is all. Action Step 6. As your income grows, increase your SIP amount. Even increasing by 10% per year makes an enormous difference to your final corpus over 20 to 30 years. That is your complete roadmap for how to start investing in S&P 500. The knowledge you now have is worth tens of millions of dollars over your investing lifetime. If this video helped you understand how to start investing in S&P 500 more clearly, please hit the like button right now. It takes 1 second and it genuinely helps our channel reach more yours who need this information. Subscribe to Daksha Luma for a brand new finance video every single day of the week. Drop your questions in the comments section below. I personally read every single comment and respond to as many as I possibly can. Until next time, invest smart, stay consistent, and let the power of compounding do the heavy lifting for you. I will see you in tomorrow's video. Before you go, I have one small request. If this video gave you even a single insight that you can apply to improve your finances, please hit that subscribe button right now and tap the bell icon. That is the only way YouTube will notify you when our next video goes live. And honestly, every single day we publish a brand new finance education video right here on Daksha Luma. Completely free. No paywalls, no courses to buy. Topics like investing, mutual funds, tax saving, budgeting, and everything in between, all explained simply and practically for you like you and me. If you have questions, drop them in the comments below. I read every single one and reply to as many as I can. Your financial future is absolutely worth investing this time in. Thank you so much for watching. I will see you tomorrow, right here on Daksha Luma. Take care of your money.